All right, what's going on, everyone? Let's get right into it. Two things kept us undefeated again last week: dynamic money management and the ORB crazy horse strategy. Only two red days in 2025, not because the market was easy, but because the system forces discipline, and discipline always wins. Most traders are thinking that it's all about the perfect entry, and it's not. Entries do not make you profitable. Management does. This past week is a perfect test to that and testament. The market flipped. We flipped with it. The market chopped. We protected our capital. The market gave clean setups. We attacked without hesitation. Simple decisions, no guessing, no emotion, no over leveraging, no over trading. Today, I'm going to break it all down for you, how we approached every single day last week, why dynamic money management turns small edges into big wins, and why ORB crazy horse, this is our strategy, keeps us one step ahead, whether the market's trending or trapping. And stick around, because I'm going to show you a live setup where smart money management, not the setup, made the difference between a break-even day and a solid payday. You're about to see why boring, disciplined trading is the real fast lane to scaling. Let's dive in. Last week was a masterclass in discipline, not just because every day was clean, but because we managed the chaos. And Monday and Tuesday, let's talk about Monday and Tuesday. This is Monday and Tuesday in our school community. Let's take a look at Sebastian here. Losing day, but no, he was just kidding. It was a win. Nice and clean entry, 5-minute candle break outside the 15-minute range, and we flew down. All right, so let's take a look at Tuesday. We'll use Sebastian again as he's posting his live setups in the community. Another easy win, 15-minute range. We have the 5-minute break outside the range, and obviously he's using the shelf method. You can see here he's lining out his shelves. He's getting ready to trail and getting that ultimate squeeze. So nice job, Sebastian, on Tuesday. Wednesday was a tougher day as it was a flip day. We'll get into that in just a second. Let's read what Maurice says here. He says, still took a W today. Tough day with the ORB. First trade, I closed at break even, and on the inside of Mike, I took a short for the 1,248 pip win. Shout out to Maurice for Wednesday's win. Now, you might be asking yourself, what is a flip day? So I'm going to explain that right now. After we mark our 15-minute range, here you can see in this teal box, we wait for a 5-minute candle body to break above or below the range, and that is our first entry signal. Price decides to break down and pretty much close a 5-minute candle body on the opposite side of this range. Essentially taking our bullish daily bias and flipping it upside down, we are now looking for shorts. Once we're in a trade, we turn on the TMT custom indicator. This is our crazy horse bands. This allows us to find additional entries based on momentum. Before I move forward, I need to explain something to those of you using what's called a hard stop loss, meaning you're out right here when price just hits the stop. For us in the Midas Touch Trading community, and what I teach and what my mentor teaches, you want to be able to hold your position until your trading idea, your overall idea, is invalidated. So instead of having a hard stop where you just, it looks good to have a good risk to reward, but the reality is the trading idea is not invalidated until the trade hits the other side of this 15-minute range, thus invalidating the trade setup. And what that does, it gives you a more of a range, right? So you can get in trouble holding trades to the other side of a range if you're over leverage, which is 99% of traders' problems. So what we teach is smaller sizing and being able to add into positions. We call this dynamic money management, and this is what allows us to get profitable and consistently profitable, making consistent gains every day. And at the end of 30 days, we lift our heads up and we go, wow, how did we make 20%? How did we make 50%? Now, we do have runs that, we had an 8% run last week, but that isn't always the case. We're not always going for those home runs. We're just going for base hit after base hit. And then we're pulling ourselves up, like I said, 30 days later, looking at the month, reviewing the week, and seeing, wow, if you just remained consistent and you took these trades based on the strategy, you're going to come out ahead. So the flip day says to add a position here once we close a candle body on the opposite side of the range. This is my invalidation for this long trade up here, right? So a little bit more room, but my sizing is just right. So I'm not over leveraging my account. From there, we turn on our custom TMT crazy horse bands indicator. What this does is allows us to see where or if we can add to our current position or re-enter into a brand new trade. Here you can see we add into a position here. All the criteria is met. If you want to learn this, by the way, come and join the free group. I have back testing videos. I have the checklist. We have brand new people. We have intermediate people. We have advanced people, people trading 6-figure accounts, multiple 7-figure funded accounts. If you just wanted to get profitable fast, this is the easiest way. So now we have 2 trades on the board, and you might say, well, you're doubling your risk, and you're right. But remember what I said, we watch our sizing. So our sizing is just right here, and it's just right here. And you'll understand what I mean. We're not going to risk more than X amount per. And then when you say per trade, typically, right? But instead of saying per trade, it's going to be the distance. So here you can see 70 points. So for every 70 points that price goes against me, I'm risking maybe 0.3% of my account, 0.5%, 1%. Maybe if things are looking good, I put on the gas and I risk 3%. Just depends. Most of the time it's very low sizing. So these two added together, we hold. Where do we hold until? Well, we use what's called the shelf method to trail price. Let me show you what that means, because this is where the secret sauce is at. So from our entry, price moves down, moves back up, has a little bit of consolidation, a little bit of resistance with these wicks you can see, and then finally breaks this low here, moves back up. When you look at this structure, you can start to see something, and that is that each previous pivot point is being retested. Okay, so if I were to pull this over here sort of like this and show you without price, I would say that the shelves are right at these pivot points. Now watch as I pull this whole thing back over on top of price so that you can see it clearly. I'm going to go ahead and back price up so that you can follow it in real time with me. You're going to be looking at areas where price has made a pivot point or a consolidation. I would even actually say that this area could be a shelf. Let's just play this out a little bit. Okay, so price comes down. What does it want to do? It wants to retest this shelf. It does that right here. Okay, so let's break this down from our entry here. Price from our entry creates what we call consolidation. Doesn't really trend. How do I know that? Because there's no clear leg. There's no real break of structure with a clean breakout from a pivot point until you examine this area right here. You see that price legs down and creates what I like to call the shelf. This is a consolidation or pivot level over to the left, and price likes to retest that. Once price retests the shelf, we are good to then start trailing. And the first place that I'm looking at is the previous consolidation zone. And what I want to do is trail right in the middle of that zone. And I want to give price the room, the distance that I need so that I can let it breathe and let price create its consolidation here. And once it's re-tapped this shelf, revisited this area, it might do it multiple times. I need it to go to the bottom of consolidation and then leg down. And then I am good to move and trail right behind it. So let's look at the next candle. It goes, it retests the shelf. Once again, let's look at the next candle. This is our leg down. So price should, in theory, not come back and test the shelf. So this is our trail stop, and that is right behind price, but we need to give it the distance that it needs, the breathing room that it needs. This is where a lot of traders get it wrong. It took me forever to dial this in. So now as price legs down, what does it do? It retests this shelf. The shelf is from the candle body to the end of the wick. So from the end of the candle body to the wick, this pivot point, this consolidation zone, once price retests that, shows a clear rejection from that area. That to me is a retest. I am clear to now move my trailing stop into this shelf and now wait for price to continue with this trend until it's over. The next candle, what do we see? Price legs down, creates another shelf here. This is the last candle body, and the wick, I'm going to include all of this wick right there. So that is the shelf. So I am now good to take my trail stop, pull it down into consolidation, the middle of this previous consolidation. This is what I have for this consolidation right here. That is all that I have. And just to be clear, the previous consolidation was right here. This is all that price gave me. So As price continues, I'm trailing tightly. Now it's leg down. I'm waiting for the retest of the shelf. Let's see, there's the retest. Now what happens? Price disrespects that shelf. And now what? Now I should be looking at price basically reversing possibly. These are early signs of reversal. There's no IFVG on a 5-minute here. There is a little bit of a high time frame liquidity grab, but without looking at anything other than structure, you can clearly see that this is a solid way to trail price. So we were able to take a losing trade and turn it into a break even or a winning trade, which most people took this as a winning trade because when we flipped, we're able to still use dynamic money management. So we trade the probabilities, not the possibilities. And this is trading the probabilities. Now heading back over to the school group, we have Peter showing his win for Thursday. This was a classic, break the high, go long, you're good to go. Huge trade on Thursday. A lot of people winning tons of money on Thursday, making up for any losses somebody might have occurred on Wednesday. But this is $1,128 win for Peter. Shout out to Peter. And it wouldn't be a full week without the emotional landmine Friday. Price action was really choppy. It took forever to pay out. It looked like it was ready to flip against us at any time. DK here pulling out a sweet win. And this is perfect, guys. This is the 15-minute range. Price breaks a 5-minute candle body above the 15-minute range. That is the signal to go long. It never broke a candle body and closed with a 5-minute below the 15-minute range. So it never invalidated the trading idea. And so this was really tough for a lot of traders because they would look at these wicks as, oh no, this is invalidation zone. And although yes, on the opposite side of this 15-minute range, that is your invalidation point, it never closed. You've got to wait for a close. There was a little tiny spot where we could have potentially added, but it was really close to our first entry, so we didn't. Price went up. I closed at break even. I went and played golf, and of course, as soon as I closed, we rocket shipped up. So I'm really happy for DK taking the win. Tons of people in the group took a win on Friday, so shout out to all the winners in the Midas Touch. But the part that nobody wants to talk about is second guessing your strategy, right? Second guessing everything. Some people over leveraged. Some people forced trades. Some people lost control. And it all comes back to this. Sizing saves you. If your position size is wrong, you're going to feel every candle like a gut punch. If your position size is right, you'll sit through the noise without blinking. So what saved us last week wasn't fancy setups. It wasn't ICT, SMC, ABCDFG. It wasn't trying to pick tops and bottoms. It was dynamic money management. Entries are easy. Anyone can click a button. Managing your risk once you're in the trade, that's where most traders get exposed. And dynamic money management isn't complicated. It's just disciplined. And if you want to learn this strategy inside and out, then join the challenge group. Take the challenge. Go to the classroom when you get in here after you introduce yourself. Click on start the challenge. Watch these videos. There's a series of videos in here. Walks you through exactly what to do step by step, literally showing you backtesting examples. You come to the classroom, you steal my checklist. You can check out what we have next for you if you want to take more of a mentorship approach. This is all built to give you as much value as possible. I'm doing it every day on live stream, showing it. I'll see you guys Wednesdays on my YouTube channel if you want to join me for live trading. Okay, so that is it. I hope you guys have a great rest of your Sunday. Spend time with your loved ones. You do this hard work, this emotional roller coaster over here we call trading, so that you can feed the beast, and that is giving back. That is the ultimate goal. So, ciao, beijos.